Some of the donors to my not-for-profit organization want their donations to specifically go towards one of our programs. What is the easiest way to keep track of this so we use the funds in accordance with the donor's wishes? Great question, and I appreciate the person who sent it in. So first of all, easiest is right, and accordance with the donor's wishes is right. You're thinking along the right track. You always want to make sure that you're handling your not-for-profit's finances in accordance with your donor's wishes. So the way to do that is an accounting term called net assets. And there are three types of net assets. Most net assets are likely to be unrestricted net assets. That means you get donations. Your not-for-profit organization gets those donations, and then you use them to forward the aims of your not-for-profit as you see fit. However, if a donor says, I need you to use this towards X purpose, for example, the building fund, or this type of scholarship, or scholarships for this type of person who participates in your program, then you need to earmark these donations in an account called temporarily restricted net assets. You can ask your accountant about it, or if you are the accountant, make sure to create an equity account on the balance sheet. You'll show the income, you'll show that the money came in, and you'll add some additional entries. You're going to increase your temporarily restricted net assets and decrease unrestricted net assets. And when you run a report in your accounting system on this account called temporarily restricted net assets, you'll be able to show your board, your executive director, or any donor that you have treated their funds as they saw fit, because when you then use those funds for the purposes for which they were intended, you will reverse that increase and decrease and do what's called releasing those net assets from restrictions. So for example, someone donates $1,000 to the building fund. Years later, or months later, the building is built, the money is spent. So when the $1,000 is received, you'll show the income and you'll show the money in the bank account, but on your financial statements, you'll also show an increase to temporarily restricted net assets. When the money is spent on that building, or let's say on that scholarship, or on those programs for the people served by your not-for-profit, your temporarily restricted net assets account will decrease because the money's been spent, it's been used as appropriate.